Good morning and welcome to GrainTV. Today's October 25th, 2011. Brock, big story out across the news wires this morning is that the China National Corn and Oilseed Information Center reporting they're going to need 3 million tons more corn than what the USDA projected. We saw some buying coming in the market in the overnight session. Corn up 4, beans up 4, wheat up 2 to 4, depending on your contract and delivery point. Other fundamental news that came out recently was crop progress yesterday afternoon. What are we seeing here on the home front?
It looks like our crop harvest is advancing pretty quickly right now. Corn is about 14% ahead of their usual five-year average. Industry did expect them to be at 75%. We only came in at 65%, so a little bit behind there. Most of that's contributed to the wet eastern corn belt, where Ohio is only 14% harvested versus 41% for their 5-year average. Soybeans, we did hit our marks there. We were 80% complete on the harvest. Expectations were for 80 to 85%, so we're right in line. Ohio, again, well behind by 34% on their soybean harvest in the eastern corn belt there. Wheat, again, planting is well behind for Ohio. That late harvest, getting their corn and their soybeans out of the fields right now in Ohio, it has been a problem, so they are behind on their winter wheat planting. 55% compared to an 82% 5-year average on their planting. Texas is also behind by about 15%. Extremely dry conditions down the southern plains. Looks like it's been persisting for about a year or so. Do we have anything on the horizon that's going to change that scenario for them?
It looks like we might here extending through the week into Friday. We're going to have a large mass of cold air coming down from Canada. That could bring some precipitation with it. I know we still have some standing crops, as you just said, in northern tier states. Is there going to be a frost concern with this cold mass of air?
I don't think there's going to be a severe frost or freeze threat right now for Michigan, Ohio, Indiana, any of those places. The biggest concern out in the eastern part of the Corn Belt is the wetness. They have had a tremendous amount of rain over the weekend and even last week. Looks like they're going to be out of the fields for about 7 to 10 days before they can actually get back in and get some more of that crop harvested. Let's take a quick commercial break and we'll come back with some technicals.
And welcome back. Brock, let's take a look at the Fire Tip trading platform. If you take a look here, it looks like we're seeing corn trade up about 2 cents. Soybeans hanging in there about unchanged. And wheat's mixed. We got Chicago wheat trading down 2 cents. Kansas City wheat is unchanged to slightly higher. I know you've done a little bit of technical analysis here on this Tuesday. Let's take a look at the December corn chart and see what we're seeing over there.
Yeah, basically we've seen a very classic definition of a bull flag formation for about the last 10 days or so. Let's make it 2 weeks. Yeah. What you see here is actually there's 2 different components to a bull flag. There's the pole, which we saw here on the 11th. We saw a huge spike up in the market, about 36 cents gained on that day, which formed the flag. Later on, this is going to be another technical indicator for how high we can possibly go. But the second component to this bull flag formation is the actual flag. And we can see that we've had this consolidation period just under the 650 mark, which is going to be the formation of our flag. And you can see that we've actually had declining volume as well down here. Now these are basically a classic definition. High volume going into the pole, which we saw on the 11th, that 36 cent gain, and lower consolidation, lower volume in that consolidation as we form the flag over the next 8 or 10 sessions or so. What this usually signals is a breakout to the upside. The potential for that upside is the same size as what the pole was that we saw on the 11th, 36 cents. If we add 36 cents to the top of this flag formation, we're going to be sitting at about 686, which conveniently fills the gap that we had at 682 to 687. So I'm looking at this as a pretty strong indicator. The biggest thing to look for today is high volume and a strong close above 650.
Yeah. This contract has had a difficult time over the last several trading days, closing above that 650 level. It seems like, technicals are only part of the equation here, but it seems like fundamentals right now are supporting it with the news out of China. Do you think that we're going to retest highs that we set back in September, or do you think that this is going to be a short run rally?
I don't think we're going to test the highs that we saw in September. The highest I think we will get is right up to that $7 level. That's going to weigh heavy on the market. Big whole number like that, people like to sell at that point. And if you're a producer out there, you want to check out some of these technicals for yourself on your home computer, make sure you take a fire tip demo or give us a call and we'll set you up with one.
Yeah, absolutely. Well, with that, I think it wraps up our show for today. Follow us on Twitter, follow us on Facebook, or give us a call at the office here, 877-472-4607. Have a good rest of your day.